my switcher right. 2, 3, 4. All right. Set it off.
Set it off.
All right. You're now tuned in to Passion Over Profits. Today we're going in deep dive. We have a guest that is from, what's the name of the company, sir?
PHP Agency.
PHP Agency. Now, we're about to jump in and talk about, what are we talking about today? Business?
We talking about business. We talking about insurance mainly, right? There's a lot of questions out there about insurance. You know, how does insurance work? What type of insurance to get? Some of you out there listening have your own insurance already. And you probably don't even know how it works. You know, you're just paying a monthly fee or whatever. So we're going to deep dive into the insurance game. Who knows? I might even leave with some insurance today. You know?
Well, it's been a lot of mention about insurance over the last couple of years, like as far as I think in the urban community. I think after COVID, financial literacy and covering yourself has been circulating a lot. So, I mean, let's go. What is going on with insurance and why is it important?
So it's a couple things. So number one, I think the biggest thing most people need to know about insurance is that it's not what it used to be. So most people, when they think of insurance, it's like this thing that where I get it, I'm paying into it, and then when I die, somebody else gets all my money, right? That's what most people think about when they think about insurance. But today, insurance is this thing that could pay you while you're alive. And so that's the biggest thing that people need to know is that it's been changing. So not only can it pay you while you're alive, but you can use it in different ways, which I'm going to go into a couple of them, but there's a lot of different ways where you can use insurance outside of the traditional ways that, that most people would think about.
Right.
Yep.
Gotcha.
I don't know if you want me to go into them now.
Yeah, let's do it.
So all right. So here we go. So a couple things. Well, one, let's say if somebody were to get sick, right? They got cancer, they had a heart attack, they had a stroke. Now with life insurance, it'll pay you while you're alive. You can use that money to keep you alive, right? To where it's not just gonna, like I said, pay your family after you pass away. So then now you can use it to pay your medical bills. You could use it to pay for your lights, for your house if you can't work. Let's say you got a bad car accident. I can't work. I'm broken up. I'm at the house for the next year. Now this policy will pay you so that you can, pretty much sustain your life, and pretty much do whatever you need to do. So that's one aspect, right, when it comes to that. The next thing is that a lot of people now, you ever heard of these terms like infinite banking, things of that nature? So then what people are doing is they're utilizing a properly structured life insurance policy to pretty much build savings, right? And the reason why they do this is because life insurance is one of the few vehicles where it has a lot of different tax benefits to where you're not going to be paying taxes on this money, all right? So then now I can create a situation where I'm building money in this policy. I can start borrowing money from myself. And when I borrow money from myself, I don't need to have a certain credit score. I pretty much, I won't deny myself. And then when do I got to pay myself back? The answer is never. So you can start borrowing money from yourself, leverage that to do different things. And then so that's one of the big things that people are doing with life insurance now.
Got you. Okay.
Yep.
Now, you said that people are not, it's not like before how it used to be, right?
Yes.
So with that being said, like is this just a burst of new information that's come to the market, or has it always been in place? Or
No. So it's a mixture of both. So yes, more people are learning about it now, but it's actually new policies that exist that didn't exist before. So I was it's like insurance is almost like a cell phone where 20 years ago, cell phones, all they did was, make calls. That was it. Today you got a smartphone. And it's like, what could you do on a smartphone?
right, almost
Like,
everything.
Everything, right? So it does more than just make calls. Now I can run my whole business on my phone. So insurance has literally been evolving to where it's not the same thing, and the insurance that existed when, our with our parents or our grandparents is different today. It's 1,000 times better. It looks the same, but a Tesla is not a Ford. You get what I'm saying? So
Gotcha.
it's not the same thing, so it's different.
That's what's up.
Got you. Well, let's say, Rich has some insurance already, right? I don't know what, policies and things that he has, but for someone like me that doesn't have any insurance at all.
Yeah.
So let's bring it back kind of to the first thing that you said. You mentioned about borrowing money from yourself.
Yeah.
Right? So, how does that actually work? So let's say I start with a policy. I'm paying whatever, $30-$40 a month.
Yeah.
And I'm assuming that I'm building that money up and that's in a pot, and then a couple years from now, I say, hey, you know what? I need to borrow some of that money. You're just saying I can just call the insurance company up and say, oh, all that money I've been paying for the past months, can I get a little bit of that?
Yes and no. It's a little more complicated than that. So number one, there's two main types of policies, right? So one is a term policy, right? That's the one that doesn't build any cash. That's the one you're paying $20, $30 a month for. So that one is more like the old insurance where it's only going to help your family if you pass away, right? But now the type of policy that you're building cash into, it's not $20 or $30. You're putting maybe $200 or $300 into it.
Okay,
right?
so you're feeding it. Yeah,
Exactly. And then so maybe $100 of that dollars goes towards the insurance. The rest of the money goes into a cash value account. So that cash value account is growing with interest. Right? That interest that is getting, depending on how the policy is set up, it might be a fixed interest rate. It might be where it's variable. It might be indexed. So there's different ways you can get interest on it. But that cash value account will grow over time. That's where you're borrowing your money from, right? And pretty much as long as there's money there, you can take it. So it takes time for that to build up. But I would say after a few years, you'll have a nice amount of money in that account.
Got you.
Yeah.
Now, can you overfund the account?
Absolutely.
And
Now
that-
there's a limit. There is a limit. So it's not like I could put $1 million into it. So there is a limit. And usually that limit is about, let's say if your normal payment is $200, your limit might be $1,000. So that's the most you could put into it. And the reason why is because to keep it within the range to where it doesn't become taxable. Because at the end of the day, it's still an insurance product. So we found the legal loophole to where we could build a bunch of money without paying taxes on it. But there's still guidelines within that, right? So then we're going to put the most I could put into it, but without it becoming taxable so that I still get all these tax benefits, but I'm still growing my cash. So they'll let you overfund it, but there is a limit to how much you can do.
So the money that you're putting into it does not get taxed.
So not only does the money not get taxed, but you're not paying the money then when you're putting it in. You're not paying the taxes when you're taking it out. Neither.
Really?
Yeah.
Oh, wow.
And like I said, there's only a few vehicles that do that, and insurance is one of them. Yep.
Gotcha.
But like I said, you got to make sure it's structured properly, for that to happen. Yep.
Oh,
Got you. Is there any, not to bash any companies or anything like that, but is there any one company or one product that's better than the other?
No, so there is, but it depends on the situation. So for example, with me, I work with like probably 10, 20 different companies at any one time. So depending on the situation will change what company is better. So if the person's just looking to build a bunch of cash, there may be one company that's better for them. But then if the person's like, no, but I got 5 kids and I want to make sure my kids have the best thing, there may be a different company that's better for them, right? So depending on how much money the person's looking to invest, when they're going to need that money by, and also what their actual situation is will change which one is the best, right? And the last thing I'll say with that is you got to remember, with insurance, you pay for it with 2 things. One is your money, but you also pay for it with your health. For example, that's the only downside to insurance is that if you're sick, you can't get it, or if you have too many pre-existing conditions, you can't get it. But as long as you're young and you're healthy, it's the best investment someone could make. But not everybody qualifies for that, right? So then depending on your health situation, that will also change which company you might want to go with, just because some companies are more lenient towards a person who has diabetes or not, so things like that will change.
How do they know about the health preconditions?
Oh, they're gonna look it up. So it's something called the MIB, right? So it's not the Men in Black, right? So it's the Medical Information Bureau. So what happens with that is every time you ever been prescribed the Tylenol, every time you went to a urgent care, anything, that's all documented. So it's like your credit score, but for your health. So they look into that so they can see everything. So yeah,
that's not a problem with HIPAA or nothing like that.
No. You have to sign off on that. So you give them the
right.
Yeah, exactly, to look into that. Yep. So and that's part of the requirements of you getting the policy. Yep.
So if you were healthy when you got the policy, what happens if you got sick?
Oh, you good. That's why you want to get it while you're healthy. Yep. They can never come back and say, oh, you got sick a week later, which is why it's so important to get it when you're young and when you're healthy. So one thing I'll say is most people think about insurance when they're like our age, right?
Right.
But the best time to get insurance is when you're a kid, right?
Of course.
If I have a kid, right, I want to get them a policy as soon as possible. Not because I think something's going to happen to my kid with their health, but because it's cheaper, nothing is wrong with them, right? And then now they're able to build so much more cash in that type of policy because it was started so early, right? So that's the big thing that we try to show people too. Insurance is not for like older people.
Right.
No, you want to set this up for your kids when they're like a month old. Yep.
I've heard that before. I
Yeah.
think there was a YouTube video out there. It's called something like the $1 Million Baby or something like that. Have you seen it?
No, I haven't seen
I
that.
think it was is it called IUL?
Yes, yes.
So I think
Yep.
it was something to set up that.
Yep.
So that at a certain point they can take the money out to use it for college.
Yeah,
or
they can use it
something?
for college. They can use it for a down payment on a house. They can use it to buy a new car, whatever. It's their cash. But I would say if you set it up and the kid is under 5 and you're paying anywhere between $150 to $200 a month, by the time that kid is reaching like 50, 60 years old, they'll have millions of dollars. I'm not joking, like literally millions of dollars. And that's paying $150, right? But then each year there's a different amount. So then by that time the kid is say 25, they'll probably have about 100 or 200,000 in there, you know. So and what could they use it for? Whatever they want.
What happens if you stop funding the policy?
Well, like it depends on when. It depends on when. So in the beginning, you can't stop funding it. So if you stop funding in the beginning, it will lapse, which means you'll no longer have it. But remember, this thing is building cash. So then if you've been paying into this policy for, say, 10, 20 years, now it has $300,000 of cash. So you can stop paying for it, and the policy will pay for itself. And it'll use the cash value to pay for the policy.
Oh, wow.
Yeah. So depending on when you stop paying, it won't make a difference.
Gotcha.
Yeah.
Okay. So now, for some people that don't have insurance, you know, the first thing that they do is they go on YouTube and they're looking at all the YouTube videos, the pros, the cons, the scams, the this and that. Let me ask you this question. How do you know? Well, let's start here. From the research that I've done, I was told, nah, don't do a whole life. Whole life is the scam. Do a term.
Got
Right?
you.
Whole life doesn't make sense because you're paying it for your whole life when you can just do the term for X amount of years. What's your take on
So
that?
here's the thing. I always tell people this. Different things are good for different people, right? So imagine if I sell shoes, right? But I said everybody needs dress shoes. No sneakers, no boots, never. That would be not smart, right? So depending on the situation determines what's the best for the person. So the truth is, yes, for most people, they should not be getting a whole life. Why? Because it's too expensive. There's a lot of cons to whole life, you know. But if a person is 75 years old, their only option is to get a whole life. You get what I'm saying? You can't get a term at 75. You get what I'm saying? So then depending on the situation changes what the person should get. Now with the term, is there anything wrong with the term? No. But if the person is looking to build cash, terms don't build cash. You get what I'm saying? So it really depends. So if I'm going hiking, I'm not wearing my dress shoes. I'm putting on my boots. You know, if I'm playing basketball, I'm not. You get what I'm saying? So depending on the situation or what I'm trying to accomplish will determine what's the best thing for me. So I think term, whole life, IUL, which is different from a whole life. A lot of people think they're the same. They're not the same. All of them have their own place. So depending on what you're trying to accomplish with this thing will determine which one is the best.
Do you find it normal that people have multiple policies and kind of mix and match?
No, now they do. So I will help somebody do that. But back in the days, no. Because most agents, right, they usually work for a specific company. And then most companies have a philosophy. So, for example, some companies will say, no, everybody should buy term. Some companies say, no, everybody should buy whole life. Well, because I don't work for any one company, I'm going to get you a little bit of this, a little bit of that. And that's like the new wave where people are doing that now. But most people, if they got insurance 10 years ago, whoever sold it to you probably had a philosophy of, I believe in this and this only. You know, so now people are, but they weren't always doing that. But that's the best way. I get the best of both worlds. Yep.
Who would you say is the one that, or what company or bureau is the one that administrates the payout? Let's just say when someone passes away, because obviously when they pass away, they're gone. They don't know for a fact that money went to the person. Who's to say like, no, this money is going to get paid out to XYZ individual, and who's control over who gets the money and things like that?
I get you. So there's a couple things. So now, number one, there's a rating bureau, right? So, for example, one of the companies we work with, they've never not paid out a claim ever. And they've been around for close to 200 years. It's never happened where there was a claim that like the person passed away, they were paying their policy, and no one got, no. So it doesn't happen. You get what I'm saying? And then so the companies will get rated based off of their ability to pay for policies.
Oh, wow. Okay.
You get what I'm saying? So
there's companies that don't pay out?
They are, but we personally don't work with those companies, right? So every company we work with, it'll be an A-rated company or better, and what that means with their rating is how like liquid they are. Meaning, how much money does a company have to where if a bunch of people died, can we actually pay for these things? And the companies, they make sure that that will happen. Well, at least the good ones do, and then so they get better ratings. So yes, it's possible that can happen, but that's why it's important to know not every company is the same. Same way, not every car is the same. There's a big difference between buying a Toyota and another car. Certain cars are going to last longer, or it's going to be better quality cars. You get what I'm saying? So we want to make sure that when somebody does look into it, you want to go with the best companies, and you'll know that just based off of the rating. So if a company is A-rated or better, then it's going to pay. Also, if the company's been around for 200 years, you're good. So things like that, I always tell people to look into. So that's something you want to pay attention to. Yep.
So one thing for me personally, me being in the sales industry for so long, I have this personal vendetta against other salespeople.
Okay.
Right? You know what I'm saying? And I'm a salesperson myself. But again, I'm a salesperson that works on commission, so I know what it's like to steer the conversation in the way that I want it to go, so that way I can benefit off of this sale. So when it comes to the insurance, you really have to make sure that the salesperson or the insurance agent that's signing you up for the policy knows what they're talking about.
No, 100%.
And legit, because they'll sign you up for something that you have no business having.
Correct. And I think that's the one thing that gives insurance a bad name, is because not every agent will do the best thing for the client. So then now someone will get a policy that was set up incorrectly, or they got the wrong type of policy because they was going, like I said, hiking, and the person sold them dress shoes. Why? Because they make better commissions off of dress shoes. Do you get what I'm saying? So then, yes, 100%, that makes a big difference. So then now a person will have a negative thought about how insurance works, or should they have it or not, but that had nothing to do with insurance as a whole, but that had to do with they, dealt with a bad agent or a bad sales rep. So yeah, that's something you got to pay attention to, and it's unfortunate, but that's in any industry. Car salesmen get a bad, name, but
for sure,
I'm still gonna go buy a car.
Yeah.
That doesn't mean something is wrong with the Porsche because the person who worked at the Porsche dealership is crazy. So that happens. But I try to, at least me, also being somebody who's in sales, I try to know the difference between the product and the person selling the product. And yeah, there are some crazy people in every industry, but that doesn't change that the product is awesome.
Not true.
Yeah.
I'm sitting here thinking about when you said, what was the bureau or the company that keeps track of the medical history? The MB.
Oh, the MIB.
MIB, right? So I'm thinking when I go into the hospital and the doctor says, "Oh, do you smoke?"
Yeah.
And I'm like,
you better say no.
Hookah? You know what I'm saying? I don't know. You know what I'm saying?
But and it's worse than that. So there's another thing now that they use. It's called, you guys might have not heard it. It's called LexisNexis, right?
I've heard of it.
You heard of
it?
Yeah. So with LexisNexis, it's not just your medical history. They see every time you ran a red light, every time you got a traffic stop. So it's like a credit score for your life. To where anything, if you're in debt too long for something, or it's everything. And then so they use that either to help you or to hurt you when you're trying to qualify for certain things. It pretty much gives you like a life score, which is, it's pretty crazy. Yeah. So
tell me about this. I've heard stories about, let's just say there's the insurance, when you have a policy, it's not going to pay out if you were in the commission of a crime, or if you're doing something illegal or something like that.
There's different.
A little bit?
So there's definitely certain things. And this, so one of the companies that we work with, they actually sold a policy to Bonnie and Clyde, and that policy paid out after Bonnie and Clyde.
Okay. The bank robbers.
The bank robbers.
Okay.
Yeah. So they sold a policy to them. They've been around that long, right? And the policy paid out, but because of that situation, now there's like, all right, we're gonna have to change the rules on how these things work, because you can't just. Because imagine this. Imagine if I'm like, I need to change my family's life. I'm gonna get $1 million policy, right? And I'm gonna try to rob this bank. And if I make it, I got $1 million. And if I don't make it, they still gonna get $1 million,
sure.
right? So the companies do that to protect themselves. So yeah, so if you do certain things like if you kill yourself or if you're committing a crime, it will be where it won't pay out. Yep. So there's different situations like that. Yeah.
So these families have to have like wills in place for someone to go collect the money?
No, they don't. I mean, it's smart to have a will, but you don't need it. Now here's what I always suggest is whoever is the person's beneficiary, meaning who's the money gonna go to, they should know that there's a policy in place. So, for example, if you have a policy, let's say you have kids, your kids are a beneficiary, they shouldn't be clueless to know, okay, if something happened to dad, what do we do? No, they should know, hey, if anything happens to me, go in this drawer over here, call this number, and they'll be able to take care of everything else. So the only thing that I would say something like that will happen is if the person who is supposed to be responsible had no idea that a policy was even in place, who to call. But as long as you know that, yeah, you'll be fine.
What's the time frame for a payout?
It depends. It depends on the company. Depends on the situation. Yeah. So I've seen policies pay out within a week, but then I've also seen it take over a year. So it really just depends on how did the person pass. Was it from natural causes or were they killed? Because and the company sometimes will do their own investigation into certain things.
Because people kill the husbands and the
correct.
wives.
Or the person is missing. That's the worst. Where we don't even know if the person's dead. So then now the company has to. There was no death certificate because the person went on a ski trip, and they just disappeared. How do we know that they actually died?
Right.
So situations like that will cause it to be where it could take longer. But in a traditional situation, yeah, it'll be right away. Yep.
Does location play a part in geographic location of where you are in the United States play a part of what your rate is going to be? Am I going to get a cheaper rate because I live in Florida compared to California or something like that?
Yes. So New York and California is the worst place ever to do anything. Yeah. You get worse policies. You get they charge you more. But everywhere outside of California and New York is pretty much the same. Now, and that has nothing to do with the insurance companies. Those are the states that create these things that make things more expensive. I don't know why. And I was in New York because I have an office in New York, right? So I was in New York for the longest, and for whatever reason, New York just got their own set of rules. It's like its own country, to where they just make things more difficult for everything.
Wow.
Yeah. So, but outside of New York and California, everything else is pretty much the same. Yeah.
How did you get into this?
So I got into it actually I would say kind of by mistake, So I've been an entrepreneur for as long as I can remember, So me and my wife, we had 2 spas that we owned and operated. We opened up spas, where they do massage therapy, facials, things like that. So we started our first spa when I was 20, right? So we had our own business from then, and then I actually had a courier company where I had 4 or 5 different trucks delivering packages, things like that. So we were business owners making good money. Just didn't know what to do with the money, right? I was like, all right, so where do I put this money, right? And that's when I started reading a lot of books, So I started reading things like, Robert Kiyosaki's Rich Dad, Poor Dad, Money Master, the game, Rich Dad, Poor Dad, or what was the other one? The Richest Man in Babylon. That's another one I like, So from reading these books, that's when I started learning about things like compound interest, or where do I put my money, Roth IRAs, things of that nature. And then so I started looking to where to put my money, and I found the company just as a client. So I wanted to set up a retirement, didn't have one because as an entrepreneur, you don't get you don't get a 401k.
Correct.
So I found the company as a client. I just learned so much in that process. I'm like, yo, how come I never knew about these things? And I was like, I'm pretty sure if I need to know about it, other people need to know about it. So I started doing it really just on the side, just a way to make some little extra money on the side. I started making more money on the side than I was making from my businesses, and that's when I decided to do it, full time. So it kind of happened by mistake. It was never a dream of mine to sell insurance. Like, what?
Right.
Who thinks of this, right? But it turned out to be great. So
I mean, I think you're educating people, and you know this information is vital to people who wasn't exposed to that. I know people that I grew up with. Had no knowledge about any of this.
Yep. And right now, I would say easily 80% of the people that I talk to don't know what compound interest is, or they don't know if I put my money in the bank, what does that mean? Or should I even put my money in the bank? Most people don't know these things. So even outside of me just making money, the biggest thing, so with Passion Over Profits, our biggest thing is educating people. We want to make sure people have the financial literacy, make sure that they know what it is that they should do, because once you know better, you could do better. It's just that most people don't know, So for us, it's a big deal. Yep.
Got you. There were some agents, some timeshare agents, some real estate agents that they'll say they brand new in the game and they do real estate full time, right? So they don't have consistent income whatsoever, 100% commission. If they don't sell a house, they don't get paid. How difficult is it to work with clients that don't have a consistent income coming in, you know, because again, once you miss a payment or two of the policy, it's over with. So how difficult is it to work with clients that don't have a consistent income?
It's not
or should
really.
they not be getting insurance?
It's not an issue. Because that's like saying, how does the phone company deal with the fact that this person not making money? It's either you want the phone or you don't. So I think the issue is most people, we don't have the right priorities in place.
Okay, yeah.
So then most people, they will cancel their policy to make sure that their internet is paid. But if they were to pass away, what is their internet going to do for their family? Do you get what I'm saying? So I think the problem is that we need to be better educated on what things are the most important, because people got money. They got money, right? It's just we're spending it on the wrong things.
For sure.
You know, so that does become an issue sometimes, of just me trying to do better at educating people on what is important to them. But at the end of the day, as long as I don't do something that's outside of their budget, then it's not really a problem, you know, because really, if you're spending $100 a month on a policy, that shouldn't take food off the table. That shit, like, you get what I'm saying? And if it does, you got bigger problems.
For sure.
You got bigger problems if you don't got $100 a month.
For sure.
And I know a lot of people, they hear other people have bigger policies, and they want to match what that other person has, and maybe that's out of their budget.
Correct.
But I mean, I think it's important for them to know it's okay to start smaller.
Yeah, absolutely.
You know what I'm
Absolutely.
saying?
It's definitely okay to start small. Because if not, you'll lose it. Like I said, it's a car. It's like a car. The Toyota is not going to cost the same price as the Bentley. Not everybody can get the Bentley. And I get it. You've seen the Bentley. You're like, no, I need that. I need that. It's like, no, that's outside your budget. Relax. Just get something that's taking you from point A to point B. That's where you're going to start. Now, when you're ready for the Bentley, you can get one. But that don't mean everybody needs to start.
You can
there,
always add to the policy, or you have to get a whole new policy?
It depends. It depends. If you're young and you're healthy, you can. But it's not a guarantee that you can always add, like, more coverage or, you know. So, which is why it's so important to get it when you're young, get it when you're healthy. But as long as you're healthy, there's not going to be an issue. Yeah.
So would you recommend, like most parents, like you said earlier, get it for their kids?
Yeah.
But maybe they can do like a smaller policy that's kind of manageable?
No, they can get a big policy and it'll still be cheap because the kid is so young. Do you get what I'm saying? Like, so for like for me, if I were to get a $500,000 policy, it might cost me, I'm talking about like an IUL, the one that builds cash and everything. It might cost me like $400 a month, right? But if you do that same exact thing for a 1-year-old, it's going to be like $50. Do you get what I'm saying? So, yeah, so it's cheap. That's why it's so important to get it while they're young. Do you get what I'm saying? So, yeah. A lot of people don't understand that.
Play.
Yeah, now
instead of buying them designer clothes.
Exactly. Yep. and I tell people all the time, shoot, tell the family, don't get them all these toys. Overfund their policy.
Yeah.
Because that's going to give them millions, you know? But, yeah.
Interesting. So for the people out there that are looking to become insurance agents, how does that process work?
Well, that process is no different than real estate. You know, you gotta get a license. You know, it's better when you're connected with the company, because you don't need to work with the company to sell insurance. You can do it independently. I just don't recommend that, because now you're on your own. It's like, all right, I got this license. What do I do with it? It's like, I don't know what to do with this. So the benefit of working with the company is you're going to get coaching, you're going to get mentoring, and we'll help you avoid a lot of the common mistakes that most people make. But what do? You get a license, and then it's a matter of you learn what's the best way to help a family. You know, so we help people with that process as far as getting into the industry, getting licensed, and being able to learn how to go out and help families. Yeah, but it's a simple process. It's a matter of, you know, somebody gets signed up, and the licensing process for us usually takes about 2 weeks for somebody to get the license. But just because you have a license, that doesn't mean you know how to use it.
Right.
You, like, how many people on the road, you're like, what?
Yeah.
You don't know how to drive. Where did you get your license from? You know. So just because you have a license, that doesn't mean you should go off on your own and start driving NASCAR. You know. So getting the license is easy. Knowing how to do the best thing for the family, that takes a little bit of time. But like I said, that's the benefit of working with a company or working with a coach, period. You know, and having a mentor teaching you those different things.
So similar to like a real estate agent. So when I get my license, I mean, I still have to be underneath a broker. So on the insurance side, if you say I can work on my own, do I still have to be like
No,
underneath?
you don't have to be under a broker. Yeah,
Really?
You don't have to. Yeah. So with real estate, you must, but no, insurance, you don't have to. But like I said, it will be beneficial to do that because then you get the help from the broker.
Yeah.
You know, so do you have to do it that way? No, but it's smart to, at least in the beginning. And then from there, go, at least for me, become a broker yourself as soon as possible. Because then now you're in the position where you're really making good money. Both in real estate and in insurance, people who make the most money are the brokers. Yeah. Always. So a lot of people, they don't always transition from going to an agent to a broker. But if you want to make like real money, that's the route to go. Yep, become a broker.
Is there continuing education as well?
Yeah. Every 2 years. But it's simple. You can do it in the weekend. So it's real simple to do.
So we have a big real estate following, and they're used to either selling that piece of property and getting that one check. But what I love about the insurance industry, I told you before when we met last week, is that whenever you help a family get a policy, you're able to get a commission every time that family renews their policy, which is every year, correct?
Yeah, so it depends on the type of policy. It depends on the company, so it changes for what it is. But it's not a commission, it's a residual, which is similar to a commission, but it's a little bit different. So the commission is where you get one big check. You sold the policy, you got one big check. But then most of the policies will also have residuals, which means that every year that person has the policy, you're going to get another check. So it's not as big, but still, it adds up. Because if I've been doing this for 5-10 years, I had 100 clients every couple months. Over 5-10 years, I got thousands of clients now. So now every month, I'm getting residuals from the client that I had that month 2 years ago, 3 years ago, 4 years ago. Do you get what I'm saying? So that adds up, So
speaking of PBD, right? Yeah. So when you say he sold the company off, so I would imagine he had his book of business. Yeah. And so when he sold it off, he sold the book of business off too, right?
Yes, correct.
Okay. Can an agent myself sell my book of business?
It depends. So in our company, yes. Not every company allows you to do that. So in our company, somebody owns their book of business. So because they own their book of business, yes, they can sell it. We actually had agents who sold their book of business.
Get out of here.
Yep. Yeah. So that can happen, but not every company will let you. They're like, yeah, you leave, we keeping it. We keeping that, so don't leave. But in our company, yeah, you can sell it.
So when it comes to that, I mean, I guess you just name your price, and if
no. So they have their own like algorithms and as far as how they and I mean at the end of the day, I'm pretty sure it's negotiable. As far as no, I'm not taking that. I want more. But or you can just not take it. But yeah, they have different ways on how they'll determine the work.
Speaking of that, why would someone want to sell their book of business?
Just because you don't want to be in the industry no more. That's it. So for example, the guy who was in our company who did sell it, he wanted to focus more on like becoming a pastor, doing other things that he just didn't want to do insurance anymore, and I think he sold it for like close to $1 million, So then he was making already about $250,000 a year, right? So it would have made sense to just keep it, but now you got to keep up your licenses. Now people are still calling you, like I don't want to deal with that. So instead of me dealing with that, I'm kind of trying to do something different in my life. I'm gonna sell this. He got $1 or $2 million, So yeah, people do it. Yeah.
Does he still get his residuals?
No, because that's what he's selling.
Oh, the whole book.
Yeah, that's what he's selling. Yeah, he's selling those residuals. But he walked away with a check, for 7 figures. So you can't be mad at him. Some people might be like, "Nah, that's stupid. You should have kept it." But some people is like, "No, I'll take this." It's like the lotto. Do you take the one lump sum or the
exactly?
Or what would you take?
I'm taking the lump sum.
Okay.
Yeah. We're not gonna wait 20 years. I don't know what's gonna happen 10 years from now.
That's true. That's true.
Yep.
Speak a little bit about the annuities, right? I hear that word all the time. It's like a buzzword. You educated me a little bit last week on it, but for the listeners, when they hear that word annuities, what exactly is
So an annuity is a type of retirement product. So there's a lot of different types of retirement products. So 401k is a retirement product. 403b is a retirement product. The Roth IRA is a retirement product. So an annuity is another type of retirement product, right? So it's just another one of those. Now, the big benefit of the annuity, though, is that you can get something called guaranteed income for life, right? So then let's say I have money in a 401k, right? I have 100,000, right? If I were to use 10,000 a year, I'm going to run out of money in 10 years, right? Makes sense, right? But then if you take that same money and put it in an annuity first, then what the annuity company says, well, instead of us giving you 10,000 a year, we're only going to give you 8,000 a year, right? But we guarantee it for the rest of your life. So it doesn't matter how long you live, even after your money is gone, they will pay you forever. You get what I'm saying? So it's a that's the big benefit of the annuity, is being able to get that guaranteed income. So anything else, you can get it from any other product. That's the one thing that an annuity does that another product can't do. Is that.
I think the answer is not to be a insurance agent. I think the answer is to start your own insurance company. I think
No,
that's
100%.
What that's what a bread is.
That's it. No, definitely. But that's like saying you don't want to, get a job. You want to start a business. Yes, 100%. But a lot of people don't want to deal with the responsibility of having their own business. They're like, how many people you talk to is like, yo, you should be about to, like, no, I don't want to do that. Like, why not? Like, you'll make so much more money. They're like, no, I just want to do my job and go home.
Right.
So yeah, definitely. If you're looking to make more money, start your own company. But that's with any business, really.
Got you.
Yep. But that's the goal. I try to tell people, hey, you want to think like an entrepreneur, you want to think like a business owner, and that's really our big mission, is to help people become entrepreneurs. Not even insurance agents, not even insurance brokers. We want to teach people and help them become entrepreneurs, regardless of what industry that's in, because we understand that entrepreneurship is going to, number one, is going to be the best chance of you becoming financially free.
Absolutely.
You're not going to be financially free from a job. It's not happening. You got to start a business. And then number two is we also believe that that's what's going to help solve a lot of the world's issues. I would say probably all the world's issues is going to be solved by an entrepreneur. It's not going to be solved by an employee. You get what I'm saying? Right, so that's our goal, is to help people become entrepreneurs, become business owners. Not only is that good for them and their family, but it's good for everybody.
Got you.
Yep.
Wow. You definitely enlightened me, man, and you definitely enlightened the viewers on insurance. I mean, it seems like you're very knowledgeable.
Well, right? I appreciate it. Thank you. I thank you for having me out. And like I said, that's our goal, is to make sure that people are aware of the different things that exist, what they can do, what steps they can take. So I appreciate you, for even having me on this platform, talking to, your viewers, making sure they just learn a little bit more about, the different things going on the insurance side as well.
Got you. And how can someone contact you if they want to learn more or get started with a policy?
Yeah. So if they want to contact me, shoot, my phone number is the best thing. Shoot, that's the best way to contact me. I give it to them now?
Yeah, go ahead.
So 321-696-4166. That's my phone number. That's the best way. Also, I'm on Instagram as well. It's Builders Coalition on Instagram. That's probably going to be the top two ways to get in contact with me, is just call me, text me, or get on my Instagram, send me a DM. That's the best way. I mean, there's other ways, but those are going to be the top two. Yep.
Got you. Nice. Got you. Richard, are we missing anything?
Nah, this man dropped jewels. I don't want him to leave.
Well, I don't mind coming back. Let me know. We can come back and set something else up.
Man.
Yeah.
Let's shout out to our sponsors before we get out of here, Rich.
Shout out to Factual Film Studio. If you're looking to rent studio space to do a podcast or photo shoots, contact Factual Films. They can be located at 8865 Commodity Circle, Suite 7B. Their contact is on the screen as you see now.
All right. And we out just like that.